Good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets webinar, where every morning we take a brief time out from our day to reflect on how the Asian markets have opened and where they're coming into the Middle East and the early morning in Europe. We're very honored to be joined today with our regular commentators from as far east as Singapore and as far west as Miami, I think, and of course us in the middle here in the Middle East. So welcome everyone. I'd like to start out with Kevin Wright, who's the lead analyst for Asia Pacific for Kpler. Kevin, your thoughts on particularly the perspective from Asia. There seems to be a little bit of a battle going on at the moment between stimulus and second wave COVID.
Yeah, good morning, Sean. Nice to see you again. I think you're absolutely right. I think the second wave has been something that's been discussed and been feared for a number of weeks in a number of different countries, and we've seen R rates. We've all become experts in R rates, I know, but we've seen R rates gradually falling, and all of a sudden, the outbreak, which has been, I think, managed to an extent in Beijing, is concerning the markets. And so you've got a situation where, you've got fledgling signs of recovery, specifically in Asia, actually, specifically around China. Import figures are up, refinery runs are up, and so on, which kind of suggests we've got some sort of health being breathed back into, or life being breathed back into the system. But then all of a sudden you get this news, and obviously everyone is very alarmed. I think there's a sensitivity to it, which is very understandable, given what we all know of the last 4 or 5 months in our recent history. That the impact on demand, the impact on the economy around the world still hasn't been fully felt. So as soon as you hear news of a potential new cluster, I think it's perfectly natural for that to impact belief and impact faith quite significantly.
I mean, one of the things that still strikes me about this journey we've been on the last few months was where to position the China truth, the China narrative. Given what's happened in America and Europe, it's so unbelievable to think that no matter how efficient the Chinese are, they only got away with 3,000 or plus deaths on the first wave as such. My point is ultimately, Kevin, sitting in Asia, do you take the Chinese data, the Chinese transparency at their word, and that's where the market assesses it to be?
I don't want to get drawn into a massively political statement. I think some of us are skeptical about whether or not all of those results, all of those data are absolutely accurate. I think it's fair to say at the same time, however, that the Chinese lockdown was imposed very quickly, and it was very, very strict. And I think that's probably been the difference, certainly between the UK and the US and other countries. I mean, the UK, I'm British, as you know, but the UK's response to it has basically been a month too late on every single measure, every single action.
And we did have a rather dramatic statement from the professor from Imperial College over the last few days, where he stated 1 week earlier in the UK, and you would have had half the mortality rate, which is quite a massive statement. Obviously, it's subjective, but nonetheless, he was a critical figure in that early planning in the UK. Let's leap all the way across the world to Randall Mohammed in Florida. Randall, good morning, good evening. I think it still is where you are. What's the outlook from the US this late evening in Florida?
Hi, good morning, Sean. Good morning, all. It's 2:30 a.m. right now in Florida. it's quite early. Yeah, look, we, as Kevin pointed out, we are quite concerned about the increase in numbers in infections. In fact, the state of Florida, we are seeing numbers like 2,000 new cases each day, which is quite alarming. And I know
just in Florida alone?
Yes, just in Florida alone. And I know that the governor, Ron DeSantis, he is not a happy camper when he sees this rise in numbers. As you know, Florida, a lot of the business comes from tourism. And, if this second wave or spike within the first wave gets out of control and we go into another lockdown, that is going to be disastrous for the Florida economy. Now, I don't expect the governor to take any draconian measures as they did in April, but I expect that he will enforce the precautions.
But in either case, Randall, I suppose the horse has left the stable, so to speak, in the context of some of the stories we have in the digest today, continued bankruptcies in the shale sector and banks backing away from further funding. What's your outlook from that?
Yes, you're absolutely correct, Sean. And, we saw those bankruptcies start in the last month. We saw Diamond Offshore was one of the casualties. And I expect these bankruptcies to continue, especially at these kinds of prices. For shale to be profitable, you need at least $50 and above. Private equity had provided a lot of capital to these shale drillers. And, if you look at price at $60 and $70, it was extremely attractive to private equity.
Right.
It seems as though that capital has dried up. As you correctly said, the banks are starting to back away.
They're backing away, and the Fed seem to be coming to the rescue, like the old cowboy movies. The posse's coming over the hill with buckets of money. Captain Tarun Arora, General Manager of GPS Chem Oil in Fujairah, how is the storage figuring out all of this? Continuing to grow, it would appear. Capacity is still there for more.
Yeah, the news is quite positive from Fujairah. Last month, they reported the highest ever inventory levels. That was on 18th May, highest ever inventory levels in Fujairah. And incidentally, that got beaten on 1st of June. And even the last figures of previous week, that is 8th June, those figures are also higher than the May's highest ever figures. So we are sustaining those levels, which is quite positive from that side. However, the throughput, the overall volumes handled in Port of Fujairah have shown a drop as compared to last year. But incidentally, in the last 2 months, the bunker barge loading volumes have shown almost 5% increase as compared to almost 12% decrease in first 3 months of this year as compared to 2019 figures. Interestingly, April and May have been positive from the bunker volumes also. And this, if you compare with Singapore, which recently reported the lowest ever figures in the lowest figures in last 27 years in Singapore, bunkering figures. So it is positive news from Fujairah. It could be because Singapore is predominantly bunkering container vessels, and Fujairah predominantly bunkers tankers. So the trade has affected container vessels much more than the tankers. So that is why this these differences have come around.
Okay.
So overall, the news is positive from Fujairah.
Well, to hear record storage levels is obviously very good, and ultimately there's still capacity there, but probably already booked, as we've talked about before. Omar Najia, Global Head of Derivatives at BB Energy. I'm not sure if you were on the webinar yesterday, but one or two people singing your praises about calling the top of the market last week and the reversal downward. BB Energy are happy to have you, I'm sure. How do you see things at the moment, Omar? Ultimately, there was a recovery yesterday, again, that battle stimulus versus COVID.
So technically, I think the S&P printed 2965 yesterday. If it can print 2954, I think we're off to the races lower. I think it has scope to move up to maybe like 31.50, something like that. But I think that high at 32, 33 holds. And I want to just get back quickly to what Randall was saying on shale and what you were saying about the Fed. So Chesapeake went bankrupt, filed for Chapter 11. Its shares were trading plus or minus at like $19 a share. When they declared bankruptcy, shortly thereafter, they went up to $70 a share while they were in bankruptcy. And then they dropped again on Friday to about $17. So the fact that the Fed is providing this liquidity is basically not taking the irrationality out of these markets. So I would be very cautious. I mean, when people start saying, nothing matters and the Fed drives the market, that to me is a market that needs to be, you need to have a defensive position no matter where it goes, what it prints. To me, you have to basically try and understand, all the stuff, be it price to earnings ratio, demand, all the rest of it. And the same with oil. Oil basically, I think, for the next month needs to work itself lower. And then from there, kind of rally. So we're not talking about the end of the world for oil, nor the end of the world for equity markets, but we are talking about we need to have these markets correct so that basically people can understand that they are worth investing in. But if the idea basically is we just keep going higher and higher and nothing matters and don't worry and whatever, no. So
Randall, there does seem to be, let me just bring Randall in there. Randall, there does seem to be in the US just a massive cheerleading force for everything Fed, print, do more. There doesn't seem to be any voice on the stage saying, whoa, hold, this distortion ultimately is not good. Is that a correct perspective from this distance?
Well, Sean, you have to remember that this is an election year. So that it is understandable from a political standpoint to win and gain some points. So that, I guess the more that you see the Fed and the more that the Fed can do, you see Donald Trump, right? And I can say that those stimulus checks have hit the ground. We have gotten our stimulus checks, $1,200 since the 1st of May. So, those stimulus checks are there. It is in circulation, and it is going to act as a somewhat stimulus to the economy.
And there might be more to come with this second stimulus package in the coming weeks.
Could be, yes. There's talk about raising it from the 2.2 trillion, probably as high as 4 or 5 trillion. Left to be seen. But undoubtedly, from a demand perspective, we're still on very, very shaky ground. Yes, there's some mobility out there, but gasoline consumption is nowhere near what it was pre-COVID. So it's slow, but it's on very, very.
But ultimately, there is cross-party political support for more stimulus. Print. There's no real check on that. Is that correct? Ultimately.
Well, I think there's going to be a cutoff at some point in time. We spoke about this the last time, and the Fed is still grappling with negative interest rates. I think the jury is still out. They seem very reluctant for now. And until
they were reluctant before to lend to corporates, but they announced yesterday that they're going to do it with somewhat uncertain credit histories. These corporates, they won't have the ability at the time to really review that, and a lot of money is going to go to probably companies that should probably go bankrupt, like in the shale play, perhaps. Kevin, from an Asia point of view, gasoline, Randall was mentioning, not so great in the US, but gasoline has been indicating to lead the market back as being in strong demand in Asia.
It really depends on the country in question. If you look at Indonesia, for example, where the lockdown wasn't implemented until fairly late, gasoline demand has been dented even as far into the year as May. You look at other countries like Vietnam, which had a very strict lockdown. January, February, March gasoline imports were lower, but they've subsequently recovered. So have diesel imports. So it really depends on the country, the regime, and the measures that they've implemented.
And in terms of the issue that was brought up by Captain Taran there, that the bunkering situation in Singapore, the largest in the world, is under a little bit more duress. What's the situation there?
Well, I think Captain Taran's absolutely right. It's about what you depend on for your trade, for your bunker trade, and ultimately Singapore is a massive container port. I mean, I can't quite see it from my balcony here, but it's the container port dominates the whole southern coastline, really. And if you're dependent on that trade for your bunker sales or for your bunker consumption and demand, then obviously it's going to drop off. I would say as well that you've got a bit of a perfect storm in the sense that a lot of low sulfur fuel oil was off in floating storage vessels and is being used, offshore Singapore, which doesn't get counted in the Singapore numbers. That's obviously increased this year quite significantly with the implementation of IMO 2020 just a few months ago. So that's also had an impact in terms of the Singapore numbers. But it's undeniable that, if you are dependent on container trade rather than tanker trade, your bunker sales are going to be affected.
Another story that was coming out of your area in the recent days that earlier in the week commentators were picking up on was the possible challenge to credit lines for traders out of Singapore, given some of the recent developments. And any further obvious indicators on that?
Not that I've seen this week, but I mean, those decisions, those actions were inevitable. You've got European lenders involved in effectively trade finance out here with small to medium-sized enterprises that really are the lifeblood of the industry, but are also a little bit more precariously balanced. I mean, I think Hin Leong was a shock to many because of its size and because of the amount of activity that Hin Leong is involved in. But there are other smaller companies that are equally dependent on trade finance that are now going to struggle. I mean, a lot of the European banks, Rabo, SocGen, etc., are basically saying we're not going to provide trade finance for Singapore Platts window traders or for Singapore supply and demand traders. That's going to have a significant impact on liquidity longer term.
Yeah, it's on kind of an unprecedented moment, unless the Fed comes along and gives them money as well. Who knows? Omar, just want to come back to the correlation that you're referencing on the oil markets and the S&P. That why you're sort of watching that so closely. And at any point, do they diverge from a point of view of market analysis?
Yeah, they diverge all the time. They're not highly correlated. But basically, what you have driving both of them right now is sentiment. So volume is very low. Volume on the S&P has been very low for years, but volume on oil is like extremely, extremely low, which means it's important to watch. If you see basically a spike in volume, it's telling you that people have a commitment. They're ready to put their money and commit to a trade. But right now, the two are basically diverging. But again, you need to basically, obviously they're completely different. They have a correlation in terms of weeks or months or days, but they don't follow. It doesn't mean S&P can go up and oil has to go up. They can take their own kind of direction. Right now, the S&P is being helped by the Fed, if you like, or the perception that the Fed will make everything okay, whereas oil is takes less of a fillip from that. It's more to do with supply and demand, basically.
You said earlier that you thought that the markets needed to correct more than they did over the last few trading sessions. Obviously, they bounced up again yesterday. what would you be sort of watching out for? What would you consider an appropriate correction from where they sort of topped out last week?
Well, look, I think basically on oil over the next month, I think basically, if you look long term, let's look at a month. If you look at a month, I think oil needs to get down. Some WTI needs to get down to something around 30. I think the S&P needs to get down. It's a difficult call, but I would say at least 2,700, something like that. It needs to correct. I mean, some of this money needs to come out of the S&P. You have to have something which is, make valuations real. But anyway, I think basically for a month, if we look at a month, I think if we can see something like $30 oil and say $27, $25, 2,700 points, 2,500 points, something like that on the S&P, I think that is reasonable.
But clearly not testing for previous lows. So
eventually, the question is the following: if the question is what beats what? Is the Fed coming in with liquidity and treating this crisis as a basically economic shock like they did in 2008 the correct approach? In other words, do job losses actually matter? Do restaurants closing actually matter? Does stuff come back quickly, slowly, all that kind of stuff? Because cash doesn't do very much. It helps financials, it helps banks, it helps people invest in equities, but it doesn't help you open a business if nobody's going to come. So you're not going to see many cinemas being invested in or many malls being invested in and that kind of stuff. So the cash,
and ultimately a lot of this stimulus is a loan. It is a bank loan. It's not a here's a freebie. At some point you're making a judgment, should I borrow this money to do something, risk something with it? Before we go to closing comments, I just want to bring up the survey question for everybody to sort of dig their mind into a little bit, sort of tackling the subject that we've been bouncing around this morning. Who will win the tug of war between bullish stimulus and bearish COVID 2.0? That's the question for this morning, just to get your thoughts on it. Who will win this tug of war? It seems stimulus won it last time and drove us up to $40. Will it do it again? Or will COVID 2.0 come to sober reality for everybody? Let's just go round the tables. Captain Taran, very positive outlook for Fujairah, but ultimately, is Fujairah well placed to take advantage of this market opportunity? Should we have more capacity for storage, more refinery? What is the piece that's missing in Fujairah in order for them to really evolve to take the next step on opportunities like this?
Actually, these investments will not be called for in the present circumstances, because with almost 10 million cubic meter capacity in Fujairah, it is adequate for normal business. But in contango situation, there is always a fallback of floating storage. And as we have seen in the early May, there was almost 390 million barrels of crude oil and products on floating storage. And by
but
end
not
of,
in Fujairah.
No, total all over the world.
Yeah.
And towards end of the month of May, it was around 273 million barrels. So it was almost a 30% drop in 1 month. So floating storage always provides the buffer. It won't justify a fresh investment for oil terminal.
Is there any knowledge as what floating storage is in Fujairah?
Floating storage is only for bunkering business. There is no floating as such in Fujairah.
There's no data around that as such.
No, Port of Fujairah does not allow floating storage lying idle in Fujairah.
Okay, fair enough. Randall, your closing thoughts. One of the things that we didn't mention, but I'll just throw it out there for your consideration, is the BP statement yesterday, Wright down to 17.5 billion, dropping long-term oil price forecast, massive sort of shift in structural focus for the major towards the great energy transition. Just sort of taking that on board and what you'll be watching for the rest of the week.
Well, Sean, the reality is that, COVID-19 isn't going anywhere. That's the first thing we have to recognize. The question is, how do we deal with it going forward? And of course, any attempt to restrict mobility will definitely have a dampening effect on demand. So we got to look at the rise in new cases. We got to, is it a spike within the first wave, or is it really a second wave that is coming? And what we'll be tracking closely is the decisions made by the various governors of the different states. Are they going back to lockdown, or will they say, okay, guys, look, we got to deal with this thing. We got to keep the economy going. We got to keep mobility going, but do it with precautions. So I think that's important. Now, the other thing is that the rig count has fallen significantly. The rig count is now below 200. It's at 199. And that is extremely worrisome, because if that demand begins to pick up, look out for a shortage in supply. It's forecasted that US production will fall to just over 7 million barrels per day in July. And that's down from 13 million barrels per day.
Wow.
The US had aspirations of getting up to 18 million barrels per day by 2025, 2030.
That's some big numbers, and the IEA are reporting later on this afternoon, Kevin, in terms of their June report, to get some data and demand forecasts from them. Expectation, maybe they correct upwards on demand again, better than what expected. What will you be watching this week, Kevin?
I'm still looking at OPEC compliance in particular. I think it's key. I think the demand scenario, the demand story, obviously is half of it, but is not leading this situation. I think if we get very rigid and very robust OPEC compliance, then I think the market has a chance. But without that, I think I think Omar's not bearish enough. So that's kind of what I'm looking at.
The outlook for OPEC, we had a statement by the UAE minister yesterday, and our own commentators on our platforms are signaling that OPEC Plus might be looking to extend the deeper cuts beyond July into August and September. Not a great surprise personally, but nonetheless, that's becoming more public now, whether the Russians will play along or not. Do you think that's an important factor to keep the prices back towards 40?
Absolutely. Excuse me. I was reading something earlier that talked about how OPEC used to meet on a 6-monthly basis, and therefore decisions were very long term and took oftentimes a while to implement. The fact that they're meeting now monthly shows you they've become much more dynamic, much more responsive. And I think the only answer I can give to that question, therefore, is they will continue to monitor the market. And if they need to extend the cuts, then they will.
But the natural cuts, as Randall indicated, out of the US at least, are quite large. Omar, the last word is with you. The rest of the week, what you're watching, where do you think it'll go?
I think, like I said, I think WTI over the next month's $30, and I think the S&P lower. I think that 32, 33 holds. Until somebody comes and explains, Donald Trump is famous for saying that debt doesn't matter. And now there's a view basically in the US that, debt doesn't matter. And when you get into that kind of magical thinking, I think basically it's not a good thing. I don't like, explanations that say doesn't matter. I really don't like that. So for me, there's nothing that goes into the S&P until people have an explanation. Fairies and unicorns don't do it for me.
Well, it's certainly a very, it seems increasingly a desensitized time. Perhaps we can bring up the result of the survey. It strikes me that we've become a little, debt doesn't matter, as in DEBT, and increasingly death, DEATH, may not matter in the context of the COVID. And that's also quite a concern as we go potentially into a second wave. If debt and death, we come desensitized to it, perhaps the policies of 2.0 COVID will be different. But the results here is that bearish COVID 2.0 is going to win out in the tug of war with bullish stimulus in a more or less 2-to-1 result. So that's the mood in this room. Listen, thanks very much to all our speakers, Omar and Randall in Florida, and of course Kevin in Singapore and Captain Taran in Fujairah. Really appreciate your insights this morning. Thank you to the 60 or so people who logged in for the call. Have a safe day and an economically productive one, and we'll catch up again tomorrow. One last thing, actually, my producer's screaming in my ear. We're doing, every year we have the Aramco Trading New Silk Road CEO of the Year Awards voting, which we want to invite everybody who participates in this call to be part of that 100 voters. And that'll be posted on the WhatsApp group. It takes only about 2 minutes to do the voting. It's very simple. The bios are there of the candidates if you want to review them. But we invite you to participate in that, and we've just posted it on the WhatsApp group, the New Silk Road CEO of the Year Awards. Thank you so much, and have a good day.
Thank you.
Thank you.